Okay, Orvin says, hi Kay, can you share techniques to avoid fake out? Got caught in AUDJPY and EURUSD fake out today. So fake outs happen, fake outs do happen. So yeah, let's say AUDJPY. Maybe you're talking about the fake outs here. There was a long wick pointing upwards. So if you watch the market real time, you might think that this was a breakout. Hold on, let me precisely draw this descending trend line. I put the high here, I take this high, and also low here. You can take the wick high or the previous wick high here too. But if you think that this was the fake breakout, you have to wait for the candle close. You know, this is something that I say over time, is that you have to wait for the candlestick close to see if this was a breakout or not. Because when the market was forming, you can see that the market was forming. You see the market goes up, and by the end of this candlestick close, the close price comes into the P wave and it closed here. And as a result, it became a pin bar, and now the market is going downwards. So unless you wait for the candle close, you never know whether it's going to be a breakout or not. So my advice is to wait for the candle close. You can find example maybe in 1 minute chart. I don't usually watch 1 minute, but in terms of the importance of waiting for the candle close, I can talk about it based on 1 minute. So in 1 minute chart, it's bearish. The market has been going down on this reversed in wave. So this is bearish. And you see that there is a pin bar here. There was a pin bar, and you might think that this is going to be the support and goes up in this direction. But so right now in this 1 minute candlesticks forming, but this one still takes 30 seconds to close. So right now I think this is a good example. So right now the price is at the support, so looks like it's been supported. It might become double bottom, and you might be buying here. You might think of buying it, but right now the price candlestick is not closed yet. So let's wait for 10 seconds more to see if the candlestick close will become above the support or below the support. It's going to close in about 3 seconds. Okay, so here is the candle close. So candle close, in this case, hold on, let me zoom in the chart in case you're watching from mobile. You see candle close was technically above the support, but now it is breaking down here on this next candlestick. So since this is 1 minute, just an example, this is 1 minute, so this 1 minute candlestick close in 1 minute. Well, in this one, it closes in about 30 seconds. So right now, until we see candle close, we never know if it's going to be a bearish or bullish candle. So right now it's bullish, but we have to see until the candle close. Like this. So always wait for the candle close. Looks like it's going to be bullish. In about 5 seconds, it's going to close. Okay, so this is nice. This is nice bullish candlestick. So here we can draw the descending trend line like this and simply wait for the candlestick breakout. And when we think of the breakout, we have to also wait for the candlestick close here. So right now it's about to break, but unless the candle close comes above the descending trend line, we can't say that it's a breakout yet. Otherwise, the market goes down on this reverse in the wave continuously and it might break the support. So right now it's going up, but still we have 17 seconds to close. So let's just wait for the candle close and see where it lands. Okay, so now the candlestick landed above the descending trend line. So this concludes that this was a breakout. So on this next candlestick, you could place a buy and expect the market goes up in this direction, like this. But the point is that unless you wait for the candle close, you never know if it's going to break out or not. And that was exactly the case in this 4-hour chart. Yeah, it was exactly the case in this, sorry, I think it was 1-hour chart. Here. So, yeah, before, I didn't really care about waiting for the candle close because we can see the past charts, and these past charts are all closed. I mean, these are all closed candlesticks with the wicks up and downwards, but the one that is forming right now is moving, and it's not closed yet. So, this is about the waiting for the candle close, and in a real-time moving market, it is also important to take that into consideration. Looks like the market is in the P wave still, and it's about to break towards either direction. Right now, we can't tell which way it breaks because Kumo flat, Kijun Sen flat, but we'll see.